Hey YouTube, welcome to the Subprime to Prime YouTube channel. Here, our focus is to get you from subprime to prime, and that all starts with knowing where you want to go on your financial journey. This is for information and educational purposes only, and not intended to be financial or legal advice. Please like and subscribe for future content. Alright, now let's get into it. In this video, we're going to talk about why it is absolutely the worst idea ever to co-sign on any type of loan, whether it be an auto loan or a regular loan. Now, I'd emphasize that co-signing on a loan is a significant decision, and it has far-reaching implications for your financial health. Now, I'm going to give you a few reasons why you should carefully think before co-signing on a loan, or just not co-sign on it, period. And then, starting it off, you are equally responsible for the debt. When you co-sign, you're saying that you are a co-borrower, on the loan, and that you will be equally responsible for what happens during the course of that loan. So you're not just lending your credit score to help someone get approved, you're equally responsible for repaying the loan. So if the primary borrower falls or fails to make payments, you're expected to cover them. So we're getting that out the way off cuff. So your credit's on the line. The loan will put on your credit report as if though you were the owner of the debt, and any late payments or defaults by the primary borrower will directly affect your credit score, potentially limiting you from borrowing or obtaining credit for your own needs in the future. Now, it can also strain relationships. Co-signing on a loan can put a strain between you and the person that you're co-signing for, because if they fail to make payments, you may feel obligated to step in to protect your credit, leading to financial strain and personal conflict, because you're going to be pissed at this person because they didn't do what they were supposed to do and hold up their end of the bargain. And we don't know what could happen. Many of people have lost relationships because you had an irresponsible borrower that just didn't do what they were supposed to do. Now, this can be a parent-child dynamic, sibling dynamic. I'm reaching here, but somebody could co-sign for their cousin. Not the best idea to do that, but that's one of those relationships where if they were close enough, they'd maybe do something like that. But in any event, it still can put a strain on a relationship. And then you have limited control as a co-borrower. You have limited control over the loan. While you're responsible for the debt, you may not have the same rights as the primary borrower, such as accessing the account information or making decisions regarding the loan. It's as if though you're giving up all your rights for to make any decisions over the loan, or see if anything's coming up on the loan that you could have avoided, just for them to be able to keep the item or auto or whatever it is that we're borrowing on, and you have no say so. Now, in some cases, you might get applicant privileges to where you can do those things, but it's a little rare, even on auto loans. But if you are to do, or become a co-applicant, it's best to basically, if it's not a car you would not get for yourself, don't do it. You better like the item or or vehicle or whatever it is the loan is for, because in case they don't pay it, you'd have to take over those payments, and it is what it is. It becomes yours. So, and like I said before, it might affect your future borrowing capability. Lenders consider cosign loans as part of your debt obligation when they're calculating debt to income. Let's say you're 2 years into a 5-year loan, and you have the inkling to sell your home in order to buy a new one. Now your debt to income ratio is going to be taken into consideration for that, and then you have this auto loan that you don't even own or you utilize, and that's going to be part of the debt to income ratio, and it could tip the scales for you not to get that home loan. Or maybe you're trying to get a personal line of credit or do anything for yourself. It limits you and affects your ability to borrow in the future. And not to mention, it's difficult to remove yourself. Like, you're in this thing for the duration. Most lenders won't release the co-signer from the loan unless the primary borrower can qualify for the loan on their own. Like, if they do a refi and they can get the loan by themselves, then you can work something out then. But other than that, you're tied to that loan for the duration of that loan. And given these reasons, it's crucial to be careful when you're considering potentially co-signing for on a loan with someone. It's not just about helping someone else. It's a commitment that affects your finances going forward and your credit worthiness. And it's better to teach someone to fish than to do the fishing for them. If their credit isn't up to par and they can't get a loan on their own, it's probably wise for them to save up and pay cash for a more inexpensive vehicle where they don't need a co-borrower, or a cheaper vehicle overall, because sometimes the lower the cost, the less likely you need a co-borrower. And just always consult some sort of financial advisor, coach, or whatever on these things if you're not quite sure. Now, we do go into depth with stuff like this on our free VIP school platform, Subprime to Prime. And these are the top, some of the topics that we deal with, all things credit and financial literacy. So please like and subscribe, and until next time, we'll see you.